more about what we have to offer. You know, as we continue to offer these webinars, I'm reminded that not everybody on here is necessarily a member of the Downtown Denver Partnership. So just 30 seconds on who we are. We've been around for about 65 years. We've been very active in the planning and the strategy to make our downtown successful and to make it that creative and dynamic place that we all seek and aspire towards. And we're a membership organization as well, and so we bring this content forward so that our members can understand all the details about this particular program and a variety of number of topics over the days and weeks to come. To kick us off this morning, I want to introduce Traci Lounsbury, who's the CEO and owner of Element Workplace, one of the top office furniture and design specialists in the market. Traci is a small business operator herself, and she spent a good deal of time researching the CARES Act and what it means for her business. Traci also happens to serve on our board of directors at DDP. And Traci, I think, has some unique insights in how this might impact her business directly. So Traci, would you mind kicking this off and kind of giving our audience today sort of your perceptions of how the program looks to be deployed and how it could be impacting small businesses across the market?
Sure, I'd be happy to. Thank you, Randy. And I really am quite passionate about this because as it unfolded, the relative importance to any cost cutting we can do is pretty terrific. So as Randy said, essentially our business is, we call ourselves placemakers, and with a focus on brand and culture, we provide workplace solutions and services across a number of studios. So furniture, modular construction, floor covering, technology, environmental graphics, shades, things like that. We have been in business since October 1st, 2008, so just about 11 years, and we were formed through a merger exactly 3 months before the Great Recession. So this is not uncharted waters for us, although I have a lot more data and experience this go around, so it feels a little bit better. We have 178 employees, and our budget this year was projected to be $106 million, just to give you some statistics about who we are. So I think the big message is that there's not one business that is immune from this pandemic crisis. We all just have a slightly different story. So versus, you know, the tragic situation of restaurants and retail who are basically shut down overnight, the effects to us are going to endure for quite some time as we're connected to the real estate and construction industries. And I suspect it'll be 4 or 5 months downstream, while the other businesses are recovering, where we're going to see our lowest point and have to fight our way out of that. So we are very much into the mode of seeking and preserving cash. So just like I'm sure all of you, our very first reaction was to secure the health of our team. We've all been, well, we have 178 employees. About 140 of us are working remotely now for about 3.5 weeks. The others are viewed essential as they're attached to construction projects. And obviously we've taken great care to get them the proper equipment. And if nobody feels safe to go out, we are not asking them to do so. So then we quickly turned to the health of our business. Cash flow became more important than profitability very quickly. We're not taking terms. We'll return to a strategy of profitability into the future. As an example, we're preserving our retained earnings. We've pursued banking discussions. We've furloughed only 10 people, those that had to be in the space as a showroom manager or receptionist in order to do their jobs. But then everybody else took between a 15 and a 50% pay cut. And our goal through this whole thing is to keep our highly skilled and experienced teams together. It has taken us 10 years to build the level of expertise by studio and perfect this business model. And ultimately, we want to preserve people and our teams and their lives. So as I studied the CARES Act extensively, the program that is best for us is the Paycheck Protection Plan versus the EIDL or the Employee Retention Credit. And I know others with more expertise are going to go through those differences. But I will tell you, I felt like it was important to share the relative importance. So with all of our furloughs, cost cutting, salary reductions, general SG&A reductions, we think we can probably preserve about $400,000 per month. When we get the funding from the Paycheck Protection Plan for our business, it will pay us just over $2.5 million of forgivable funds. So it is such a big lift. that I just felt it was really important to share those statistics to encourage everyone to apply for the best plan for your business, but to understand that this is probably a once in a lifetime occurrence, and it is critically important and something everybody should take advantage of.
Traci, thank you. And thanks for the transparency. I think your story, I think the fact that you've gone through this before in the last recession, so you maybe were prepared and at least have a little bit of that strategic planning muscle to deploy here, I think is certainly lauded. I think also your willingness to share and kind of be that role model for others, really greatly appreciated here today. I want to say, in my 25 years of doing economic development work, we've never seen anything like this before, both from an economic crisis standpoint and then the sort of the federal response. And so I think the more companies across our market that quickly come up to speed on the capacity of these programs and what they're designed to do, and then ultimately put forth the effort to apply, I think it's going to allow for a greater, stronger economic recovery and soften the pain that's felt by our business owners and their employees in the weeks, months, and hopefully not years to come. I want to transition now to our guests from Grant Thornton. So thank you, Traci, for your time here today.
My pleasure.
So as I said a moment ago, just knowledge in this case is always power. Knowledge in this case is also money, and finding ways to bring your company up to speed, bring your company, get them fully informed so you can pursue these programs aggressively is critically important now, because this is a very short window of time when these programs are available. It is going to be a bit of a competitive process for companies to go through. And so making sure, as Traci said, you know which program fits best for your company, and then ultimately going for it aggressively in the days, frankly, this week and early into next week to make that happen. Our guests today are from Grant Thornton, a major accounting firm across the country and around the world. Lori Davis is with us. She too is a board member with us at DDP. She's also the office managing partner for Denver. And Robert Shea, who's a principal and the leader in their public sector field, and a great depth of knowledge. The two of them are going to have a bit of a conversation, a Q&A between themselves, trying to cover the details of the program, anticipating the questions that our audience might have today. But certainly throughout, if you have a question you want answered, put it into the chat down at the bottom of your screen. I'll be monitoring that myself. And when Lori and Robert finish up with their conversation, I'll sort of orchestrate it and manage a Q&A session at that point. So please, as we go through this, certainly be asking your questions at the bottom, and we'll manage that throughout. So with that, Lori, I'll turn it over to you.
All right, thank you. Appreciate it, Randy. Good morning, everyone. I am happy to be here with my colleague, Robert Shea, who, as Randy said, is a principal in Grant public sector practice based in Washington, D.C. And he and others on his team have been following this coronavirus legislation pretty closely. So I'm happy to bring his knowledge and expertise virtually to Denver. And like Randy said, we're going to do kind of a Q&A format. So I'm hopefully going to cover a lot of the questions that folks in the audience would have, the general questions that impact specifically small businesses. But obviously, if I miss anything, Randy can tell us what questions you have after we get done. So as many of you know, Congress has passed 3 phases of legislation to address the coronavirus crisis so far. Phase 1 was a stopgap measure to provide badly needed funding, a little over $8 billion, to those on the front lines of the crisis. Phase 2, which was signed on March 18th, offered direct support to individuals and families that were impacted by the crisis, including emergency paid leave for affected employees. Phase 3, which is what we're here to talk about primarily, the Coronavirus Aid, Relief, and Economic Securities Act, also known as the CARES Act, was signed into law on March 27th, just a little over 10 days ago. And it is the largest piece of economic stimulus legislation in American history. So I'm going to ask my first question. Robert, can you describe at a high level what's in the CARES Act?
Sure. Thanks, Lori. And thank you all for inviting me to be with you. I will say my neighbors have just started chopping down a tree as we've launched. So hope there's not too much distracting noise, but I know we're all in the same reality. So the CARES Act, again, as Lori said, $2.3 trillion, a staggering sum if you think about it. We started the first bill with 8 billion and got quickly up to 2.3 trillion. There are 4 big categories in the bill. One is direct payments to individuals, including $1,200 per adult with an additional $500 per child, $500 billion in lending for certain industries, states, and localities, $350 billion in forgivable loans for small business. That's the program Traci was talking about primarily. And then $150 billion for hospitals and other medical supplies.
So there are a number of provisions in the bill that are focused on small businesses. Can you tell us about those?
Sure. Well, Traci mentioned the one that's getting the most attention. It's the Payroll Protection Program. It's a loan designed to provide a direct incentive for small business to keep their workers on the payroll. SBA will forgive the loans if all employees are kept on the payroll for 8 weeks, and the money's used for payroll, rent, mortgage interest, and utilities. Traci also mentioned EIDL, the Economic Injury Disaster Loan. The feature of that is that you can get an immediate $10,000 upon application, and then up to $2 million at a rate of 3.75% for small businesses, 2.75% for not-for-profits. And then there's the Small Business Debt Relief program, which defers all loan payments, including principal, interest, and fees on non-disaster related SBA loans for 6 months. And this applies to both existing and new general business loans taken out anytime prior to September 2020.
So like you said, the Payroll Protection Program is getting the most attention by small businesses. Can you tell us a little bit more about that program?
Sure. And I'm confident many who are listening today have followed it closely. But the reason folks are so interested in it is, even though very Washington thing, they call it a loan program. If you follow the program's guidelines, you don't actually have to pay the money back. So it's more like a grant. Companies with 500 or fewer employees can apply for a loan of up to $10 million. And so long as they certify they've used that money to cover employee compensation and other fixed costs, they won't have to repay the loan. Congress appropriated $350 billion for the program, which is an incredible amount of money. But I'm also pretty confident folks listening today are on the front lines of the impact of the economic devastation we're facing. So that money will go quickly. And if you followed the launch in the news, lenders have had a difficult time navigating the Small Business Administration's regulations for the program and keeping up with the volume of applications. You know, there are probably 6 million small businesses with more than a small number of employees, and if a fraction of those apply for benefits under this program, it'll go quickly. While I was sitting here, Senator McConnell announced that he's going to try to move legislation as early as Thursday to add money to that program, because it's become exceedingly clear that it's going to run out of money quickly. There will also probably be a number of tweaks to the eligibility criteria for that program.
Great. So I know it's, like you said, a lot of the people on the phone or on the webcast have probably already been looking into this, but can you tell us like how a business applies for this program and when they're allowed to start applying?
Sure. There's a very simple application for the program available at sba.gov. That's the Small Business Administration's website. But you apply through an SBA approved lender. it's preferred that you use a lender with which you have an existing relationship. They're going to be better able to verify your financial information, payroll information, general eligibility for the program. It's not essential, and SBA is adding lenders, but that will delay your access to money under the program. It just won't go as quickly as if you applied through an SBA approved lender with whom you had an existing relationship. Applications open for many small businesses on last Friday, April 3rd. And as I mentioned, the volume is incredible. Some lenders weren't able to open applications as quickly as they hoped because the regulations hadn't been published, and they're being updated in real time. Independent contractors, applications open on Friday, April 10th.
Great. So what businesses are actually eligible for loans under this program?
So the general criteria is companies who employ 500 or fewer employees. But you can also be eligible if you have more than 500, provided you have an employee-based size standard under SBA regulations. In addition, if you're a restaurant, a hotel, or a business that falls under NAICS Code 72, accommodations and food services, and each of your locations has 500 or fewer employees, you're eligible. Tribal businesses, 501c19, veteran organizations, 501c3 nonprofits, including religious organizations, are eligible for the program. Nonprofit organizations, like other businesses, are subject to SBA's affiliation standards. Independently owned franchises, again, with under 500 employees who are approved by SBA, are also eligible. You can find a list of those organizations under SBA's franchise directory. Sole proprietors, independent contractors, gig economy workers, and self-employed individuals are also eligible for the Paycheck Protection Program. That's a new feature added in the CARES Act.
So how much can a business borrow?
So the maximum is $10 million, generally computed as 250% of average monthly payroll expenses, up to a total of $10 million. It's intended to cover 8 weeks of payroll expenses and any additional amounts for making payments towards debt obligations. All of this is designed to help you keep your employees on the payroll for the immediate future. Now, whether or not what Congress does in the coming days tweaks that amount or the time period remains to be seen. That's something we'll be following closely.
Yeah, and I've actually had some clients asking how to compute the average payroll expense. So it's more than just the actual payroll costs. It's benefits and taxes and those things as well.
That's right. That's right. And frankly, that's one of the areas the Small Business Administration has had a hard time keeping up with. The regulations, frequently asked questions are constantly being updated to clear some of the confusion up around the program.
Yeah. Okay, so after someone applies for the program, how much of the loan will be forgiven?
Well, potentially all of it. The amount that is intended to be forgiven is equal to the sum of expenses for payroll, other expenses, interest payments on mortgages, rent payments, leases, and utilities. Payroll costs include employee salaries up to an annual rate of $100,000. You can't include in your application for your loan any payroll costs that exceed $100,000. But it does include hourly wages and cash tips, paid sick and medical leave, and health insurance premiums.
Great. So the small business debt relief you mentioned earlier seems pretty self-explanatory. self-explanatory, but can you expand a bit on the economic injury disaster loan, the EIDL program? Can a business apply for that and the payroll protection program?
Sure. And again, the feature of EIDL is an immediate infusion of $10,000, generally intended for smaller businesses. You can get reimbursed up to, you can get a loan for up to $2 million at an interest rate of 3.75% for small business, 2.75% for not-for-profits. The only wrinkle there is if you receive benefits from the Paycheck Protection Program, the $10,000 you got from EIDL will be deducted from your loan forgiveness in that program.
Okay. Are there other provisions that are important to small businesses?
Well, it's a big bill, and there are a lot of important tax provisions. You know, one of the things I've counseled folks to do is to take a look at your current situation and all of the benefits that accrue not only to your business but also to your employees. There are a number of important and unprecedented individual benefits that are helping out all individuals in the United States during this time. But there's also the employee retention credit, fully refundable tax credit for employers equal to 50% of qualified wages. And eligible employers are those for-profit or not-for-profit organizations that either fully or partially suspended operations during any calendar quarter in 2020 due to orders from an appropriate government authority due to COVID-19, or who experienced a significant decline in gross receipts during the calendar quarter. Again, employers suffering through the crisis need to take into account their current circumstances, considering the array of benefits that are available and being provided by governments, employers, to governments, employers, and individuals.
Okay. Well, thank you for answering those general questions.
Yeah, I hope that's useful.
Yeah, I'd like to now give the audience an opportunity to ask questions. I don't know, Randy, if you've been monitoring the chat.
Yeah, I have, Lori and Robert. First of all, great job. And I think the way you managed the conversation really helped answer a lot of questions that were on a lot of people's minds, but certainly with so many businesses facing such a hardship, that this is definitely a hot topic. And we have a number of questions that have been posed. Maybe I'll start with the most common one, which is in particular with the Paycheck Protection Program. How does that work, or how could that work for sort of the very small businesses, either an LLC with no employees or a sole proprietor, somebody that maybe works on it for a 1099? How might they engage in that program, or if not, where might they look for support through this CARES Act?
So I think, you know, the program basically allows you to be reimbursed 100% of what you otherwise would have gotten paid had we not suffered the current crisis. So the ability to compute what revenue that individual would have gotten through their whatever business arrangement they're in, and they can document that, and they have a relationship with a lender who can help coach them through the application process. That's the amount of money they can get through the program. I hope that clears it up.
Yeah, because I would think as a self-employed individual that is their compensation, right? I mean,
That's right.
If you're just you're getting a 1099, that is the equivalent of an employee's compensation. So you would do the same 250% of your average compensation.
Okay. So any type of LLC, somebody that works for a 1099, they are eligible to pursue these programs?
That's right.
Okay.
It is very broad. The eligibility criteria are pretty simple, and the threshold of evidence, I hesitate to advertise this too widely, but the threshold of evidence is very low. And it's up to your lender to basically, certify that the information you've provided is adequate for them to validate the amount you're owed under the program.
So maybe just building on that last point a touch further. So we have questions around commissions, bonuses. How do they get calculated into that historic sort of wage level? And then also we had a question about if they took a SEP IRA contribution, is there a way to calculate that into the mix?
So I don't know the answer to the question on the retirement contributions. So I think those are computed outside of wages. I do know that commissions and compensation of that nature do count towards the individual compensation for purposes of computing whether or not you've exceeded that $100,000 salary range.
Okay. An interesting question that is focused on a hotel management company, but I think this is something that would also be germane to a number of restaurants where they are truly the manager of that hotel on behalf of an owner. Trying to read the question off of the Q&A, and more questions keep popping up, so it just slid down on me, sorry. Basically, the question was, who applies? If you have a hotel owner that reimburses the hotel management company for payroll, does the owner apply or does the hotel management company apply?
Well, I actually have a hotel management company client, and they are actually doing they receive a management fee from the hotel owner. Mm-hmm. And so they're the ones that have the employees that actually so I would assume, and my client is doing this, the management company is applying because they're the ones that have the compensation. The hotel owners have more of a management fee. So I wouldn't think that would count towards employee, compensation.
So the management company with the employees making the direct payroll to people would be the one to apply. I think.
Yeah. I don't know, Robert, if you have any additional. I just specifically have a hotel management client that is applying currently.
Yeah, that's not one that I specifically have come across. There's been a lot of talk about the affiliation rules, and generally to the extent your company is owned 50% or more by another entity, you then become affiliated with that company, and so the total number of employees that work for that individual are counted together and may bump you up against that 500 person limit.
Okay.
Those are some of the limitations I expect to be relaxed as Congress takes a look at tweaks to the current program.
Mm-hmm. So this might be a little bit more of a difficult question for you, but because it asks you to predict the behavior of the federal government. But
no, that's cheap. That's cheap.
Everybody wants to know when. So if they've begun their application process either directly to the SBA for the disaster program or for the PPP program alongside a bank, I've seen headlines that it's starting. I think Treasury Secretary Mnuchin has been posting that there's money going out the door now. But do you have a sense of the pace of when if a company applies tomorrow, what's their expected timeline to hear back, get an approval? And assuming approval, when might they receive the financing?
It's highly variable. But remember, the program's been open for less than 3 business days. But we have clients who've already received payment through the program. So it can happen almost immediately. I would encourage folks, though, to get in line as soon as possible, because as I mentioned, a backlog will begin to build. But the application process is very simple. The eligibility, the documentation required for eligibility verification is very slim. And the intent is that this money be pumped into the economy as soon as possible. The recognition by Congress that more appropriations are needed within a few days just underscores how popular the program is.
Yeah, I had heard a story from one bank who went live basically over the weekend. They had 99,000 applicants within the first 24 hours. The need is extraordinary, but we have to go for it. I think the businesses that are on this call today need to do it for themselves and for their employees, for the community, make every effort to pursue it. And I think you alluded to this earlier. There's my belief is that once that volume of need and the demand is exhibited, there is likely going to be additional resources deployed.
Yeah, and as our clients get, sorry, Lori, go ahead.
Robert.
I
No, go
was just
ahead.
going to say, as our clients get approved for loans, there's joy in knowing that that means a number of folks are going to remain employed at least for the next 8 weeks. And in the current crisis, that is a very satisfactory conclusion.
Agreed. Thank you.
Yeah, I was just
Lori
going to say
was
a
gonna
lot
say
of my
something.
banker friends are, yeah, I was going to say a lot of my banker friends are working around the clock trying to process, as many as they can. I mean, they're working all weekend and, late into the night. So I wouldn't hesitate to go ahead, even though it feels like there's a little bit of a backlog, go ahead and get your applications in.
Sure. I'm going to ask my team for a little bit of help here. I think as we go through these questions, if they can mark them answered in that Q&A chat, that'll help skinny up the list for me to skim through. But we have I think a question that all of us need to be asking ourselves. I'm going to read it. I think it's pretty much verbatim. So on the application, the applicant must initial in good faith the quote, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant, unquote. What do you recommend to businesses that have current cash reserves, anticipated a bit of a hardship, and the anticipated hardship is unknown at this time? Even Traci alluded to that earlier, where she's already felt the hit. She's had to make some staffing changes, but she's anticipating her industry is going to get hit further downstream. How or would going through the application process and successfully receiving the loan put our organization at legal risk, given the hardship is unknown at this time?
So I'm going to reinforce something that you said, Randy, and that you said, Lori. Apply, because if at some point if the money's not needed, then you'll have it in reserve to repay it. The cash reserves shouldn't impact your decision making because they're not a factor in the application process. So in anticipation of need should suffice to motivate you to apply. Does that seem to answer the question, Randy?
Yeah, I think so. I think it's similar advice that I would give too, is just, I think if your company has felt an impact and you feel it and you anticipate further impact, I think the time to apply is now. And you could always decide not to take the resources. You could always determine that it wasn't a hardship and not take the forgiveness of that loan. And I think there's other paths going forward.
Yeah, we've had a couple of clients, ask us how much they should take based on what they anticipate they're going to have to do from an employee standpoint. So let's say that they currently feel like they can keep all of their employees because that's what this program is for, and they're trying to get the money to be able to do that. But down, maybe 3 weeks from now, things are even worse, and they end up having to furlough or lay people off, so they haven't been able to retain all of their employees. Then all that will do is we've still been advising them to get the maximum that they think they might need. And then all that does is it turns it into, from a forgivable grant into a loan, if in fact they're spending it on, or they're not able to retain all of their employees.
Just a quick technical question. So we heard earlier that this captures wages and salaries up to $100,000. That just to clarify, that does not mean if somebody's paid 150, they're not eligible. If I'm not mistaken, it's once they hit 100,000, you stop calculating that additional 50.
That's exactly right.
Okay, thank you. All right, there's been some questions about early stage companies. So if I started a business 6 months ago and I've been on a strong trajectory up until now, how do I apply as a small early stage startup business? Am I eligible if I don't have history going back to March of 2019?
Yeah, SBA recommends for new businesses, you can calculate from the time period of January 1, 2020 to February 29, 2020, again, including the costs over $100,000, but they are bending over backwards to find some method for you to calculate what that was or would have been. And your lender can help you work through those calculations.
So they could apply and find a path to.
Absolutely, absolutely, absolutely.
A question about documentation for forgiveness. So best case scenario, they apply this Friday. I know there's a pressure on the banking system to turn around approvals very quickly. So the following Friday, let's assume they get approved. Couple elements to this question. When must they re-engage with their prior employees? So if let's say they're a restaurant that laid people off in March, they get this financing to come through in 2 weeks. When must they bring people back for that 8-week window? And then once that time period is done, what documentation is needed to verify the forgiveness or to trigger the forgiveness element of this program?
So I'm not exactly sure what documentation would be required, but you have until June 30th, 2020 to restore full-time employment and salaries for any changes made between February 15th and April 26th. I think that answers the first part of your question.
So if I just want to make sure I'm clear on this because a few people have asked this question, whether you're in the restaurant, hotel, service industry that's been particularly harmed. So if they apply now and get the capital now, they have until, did I hear you say till July to bring their teams back?
June 30th, 2020.
Okay, June 30th, 2020. So a restaurant then, by then we can expect to see some easing of social distancing. Restaurants can come back into play. And what level of employment, if you're a restaurant that laid everybody off, what level of employment needs to be rehired in order to qualify and trigger that forgiveness?
The forgiveness will be equal to your payroll plus expenses.
Okay.
So I think I'm looking at this in real time. Your loan forgiveness will be reduced if you decrease your full-time employee headcount. Your loan forgiveness will be reduced if you decrease salaries and wages by more than 25% for any employee that made less than $100,000 annually in 2019. I think the program is intended to encourage you to keep on or rehire as many as possible. And it's really the actuals, 2.5 times actuals is what you can be reimbursed.
Okay. Yeah, you're right. I think obviously businesses are going to need to ramp back up into this, but the program does provide that incentive to bring the entire team back and get that reimbursed for 2 months. And then we all need to be pushing to make sure the business there is to support it and sustain it longer term. Maybe not.
And again, we need to monitor this closely because I do anticipate that some of these amounts and timelines will be altered in the coming days as Congress takes up phase 4.
Couple questions about maybe sort of profitability as income. I think we touched on this before. I think a few more have popped up. I want to make sure we're clear on it. So if I run a restaurant or if I run a small business and I'm the owner and I don't necessarily take a full salary and that income, if I'm a franchise owner and that income is effectively my salary, how does that get factored in?
I don't think that gets factored in. It's the salaries of your employees. That's right.
How about
including yourself?
How about from a realtor's perspective? If they're almost exclusively commission based, no salary, but and then issue that 1099. I think we covered that earlier. The 1099 that income would count.
That absolutely would count.
So Laura, you were going to add to that?
Yeah, I think that's self-employment income, so that would count under the self-employed individual.
Yeah, and maybe Lori, I want to go back. You had talked about how you guys are advising your clients. We're in this, somebody described it as people standing at the border of Oklahoma back in the day before the Homestead Act and then charging out to go stake their claim. In a lot of ways, with the 99,000 applicants within 24 hours, this is that way with so many businesses challenged. If my business banks with Bank A, and maybe they historically haven't been an SBA lender, maybe they're still trying to come up to speed on this, but my relationship resides with that bank, what's the best advice? Do I wait, take the risk and wait with them to go through the process, or do you think there will be other banks in the market that will be open to new customers for this particular program?
Well, I like Robert, I think we're talking to our clients about working with the banks they have a relationship with, because it'll be a quicker process because they understand your business. They know more about your history. I think there will be more banks that, will get qualified or certified to be able to provide these loans, but that's going to take time as well. And so I think it would probably be safer to use even though there's a little bit of a backlog, use the existing relationships you have with your bankers.
Yeah, I would just add to that, Laura. I've been on the phone with at least 15 banks over the last 2 weeks, and every one of them has said just because the volume is going to be so great out of the gate, their first screen is, do they have an existing relationship? Some of them are going, do you have a loan with them is certainly the highest sort of level of relationship. They know you best. Some are even going down, do you even have just a checking account or a savings account or a CD, a certificate of deposit, or even a credit card with that particular bank? So be creative. If you find that you're not maybe with a bank that is racing with this program, look in your wallet. If you've got a credit card relationship with one of the major banks, they might be an opportunity for you. So will the forgiven part of the loan be taxed? So if I'm successful and I pick up a couple $100,000 of forgiveness on the loan, will that $200,000 be taxed in subsequent years?
No.
I would have guessed wrong on that. That's good. That's interesting. All right, I'm screening through really quickly. So I think, Robert, you touched on this before on that June 30th date, but just to be certain, if our cash reserves are such, we can sustain our staff until August, but anticipating not being able to maintain current staff levels beyond that period due to current projects stopping, are we still eligible for PPP? So should they take the program, or are they eligible now? Should they take that now and save their cash for downstream?
So, yes, I think the loan forgiveness is computed from 8 weeks. Well, I don't know the answer to that question. Maybe that's one where we can get you a response and you can distribute it to the group.
Okay, that'd be great. Thank you.
Yeah.
I'm just trying to screen through to find questions that are multiples here. So just Robert or Lori, somebody looking to repeat the dates. When if they laid people off, what's the start date to start looking at that, and when's the end date for the layoffs? So you just mentioned dates that employees were let go. I think it was February 28th to April 20th. Can you repeat those dates?
Let me pull them up again.
Yeah, February 15th through April 26th.
Oh, thank you.
Thank you, Lori.
You're welcome.
Could you, either one of you, speak to how these programs might be layered together? So we're talking a lot about the PPP program, Paycheck Protection Program, which I think we all agree is the most sizable program in the toolkit today. How might somebody layer that with some of the, I forget the exact name, Emergency Disaster Relief Program or something along those lines? How would that, I think it's $10,000 advance. How might you suggest small business pursue both, or can you pursue both?
So yeah, I think there's the debt relief program, which basically defers your payment and interest under an SBA loan for 6 months. EIDL is a garden variety SBA loan. The feature of which is a immediate injection of $10,000, and you can apply for both the loan, the EIDL loan, and a Paycheck Protection Program loan. Obviously, it would be in the best interest of a company to take the Paycheck Protection Program loan because that's totally forgivable. The $10,000 would be deducted for the amount forgiven under the Paycheck Protection Program. But if you were ineligible for that and simply got the EIDL loan, there are interest rates associated with that, and that is not forgivable. Does that help?
Mm-hmm.
Yeah, it seems like if there was a company that had to lay off their employees, who had significant impact on their business, and it's going to be a lot longer term maybe than June 30th, and they're not going to be able to hire them back, so they're really not going to qualify for the debt forgiveness part. So I would think those companies would be more, the EIDL loan would be a little more applicable, and they could probably get it more quickly.
A couple of questions around if I'm an entrepreneur and I own two or more businesses, separate entities, can I apply for each entity?
If you own 50% or more of each of those companies, all of those are considered a single entity under the affiliation rules of the program.
So would that mean, Robert, I could roll all of those employees up into one master application, or would I have to choose my favorite restaurant?
No, it'd be one application
With all of those entities rolled in. Okay.
Right.
Just trying to keep pace here for a second. Give me one moment. So to clarify, if my business pursues the PPP program, but I determine I really can't bring people back until May 1st, so I've got this month or even May 15th, I assume my employees can still receive unemployment through that May 15th date, but then, Robert, I would only get credit for May 15th through June 30th, or would the 8 weeks go beyond?
Restate your question. Your employees, if they're unemployed, are still eligible for unemployment. Mm-hmm. They're not impacted by your receipt of funds from the program, unless, of course, you reemploy them, in which case they're not unemployed.
Mm-hmm. And so they continue to collect unemployment till the date they come back on the payroll. And then if I hire them back May 15th, is June 30th the deadline for the 8-week calculation? So in that scenario, I would only get 6 weeks of forgiveness calculated?
I think that's right. But again, I fully expect Congress to tweak these dates when they uh, when they enact legislation to increase funding for the program.
Yeah, until they do, we can't be certain, but everything I
That's
read,
right. That's exactly right.
you suggest that's the case, but it's still early. Interesting twist on the hiring of employees. So if I had Emily working for me before, I had to let her go, but now I get this program, I'm bringing everybody back, and Emily doesn't come back, but I hire Traci, does it have to be the same person, or does it have to be the same number of employees?
I have a lot of confidence in the government, but I don't think they're going to be tracking individual employees. So no, it's number of employees.
Okay. So if we have kept employees on the payroll through today, but are now looking at the possible layoffs, are we still eligible for payroll relief? And do we have to keep them on the active payroll to be eligible? Or do we have to have a layoff period in order to receive funds?
You absolutely do not have to have a layoff period in order to receive funds. You simply need to certify that you have retained these employees during the crisis.
Okay, thank you.
Don't lay a bunch of people off in order to get access to the program. That would be counterproductive.
Yeah, the intent is to really avoid the whole unemployment process for as many people as possible. So we've covered this, but I just want to recognize, and I think as Grant Thornton does their work, I know you have some active work in DC, but a lot of restaurants, a lot of hotels, a lot of service companies are really questioning whether or not they can bring back the preponderance of their people by June 30th, especially as we continue to go through these phases of social distancing. So I think there's support for extending those dates, certainly on when that 8 weeks starts and finishes. That's certainly a hot topic. So maybe we'll take a couple more questions. So there's a question or two in here about canceled contracts, and as companies try to determine, what was their revenues before and what was, the revenues today, they had booked some business back in January, February, but those contracts have been voided, and so now this year is looking far worse. How might that play out when they're applying for an SBA loan through these programs? Is in terms of calculating income, variations between the 2 years?
So you're suggesting that last year was a healthier year than this year.
Correct.
I think your financial statements from the previous year are the ones that should be used to calculate your payroll and other costs. I think working with your lender to come up with the evidence that most matches what's requested by the SBA is what I would recommend.
Yeah, I would think the revenue piece of that would be more relevant to the employee retention credit, because you're looking at the difference between if you're what's considered suspended, your business was suspended or partially suspended, you compare last year at this time to this year at this time to see if it's decreased by a certain amount. But I don't know that there's a revenue measurement with the SBA loan.
Except to the extent you have to show that there was a decline in the business that
that's true.
Put employment of your employees at risk.
Right.
There's a couple of questions about use of funds, in particular the disaster relief or emergency disaster relief loans. Can that be used to pay off existing debt? So I have a loan at 8%. Disaster loans are, I think if I recall, 2.5%. Can I borrow from the SBA to pay back existing debt? Is that an acceptable use of funds?
Yes. Generally, any expenses that couldn't be met but for the pandemic.
There's a couple of questions in here from self-employed folks about waiting until the 10th of April to start the loan application process. I'm not sure what would prohibit them from applying now, but
Yeah,
curious.
April 10th for self-employed individuals.
Is that the date? So, okay, thank you. I had not seen it. So maybe we'll close with this one. If I use the Paycheck Protection Program for its intended use, is the forgiveness certain, or what is the risk that they'll have to pay the loan back? We touched on this earlier, but I know the banks at this stage are expected to weigh in on this in terms of that forgiveness sign off. Do we have any indication at this stage what they're planning to do with that?
So right now, certification that you have used the funds as required is all that's needed for forgiveness. Whether or not there will be audits of those certifications, I'm certain there will be. But you know, where the liability falls is one of the things that lending institutions are finding great uncertainty about. The intent of the legislation is to get the money out the door quickly so that you can stem huge rises in unemployment. There are no guarantees in this that the oversight won't be more robust than I imagine. But right now, simple certification is what's required.
Great. Well, Lori and Robert and to the entire team at Grant Thornton, thank you for this exercise. I think it's incredibly insightful, and I think gave some terrific direction to our small businesses across the market. I think my takeaways: apply, apply, apply. If you do those three things, right, I think we're going to be setting our companies up for success. To your point, both Lori and Robert, I think this is designed to deploy serious capital into the market in a very short period of time to help stem this economic crisis that we're in. And so the intentions are pure, so to speak, in trying to make that happen. And it's up to our small businesses and our banking community to really execute on this. For our audience, there's no way to applaud our speakers on a webinar, but I'm sure they would. We will make this recording available on our website, downtowndenver.com, and we also will share it with everybody who registered for this program here today. Thanks so much for participating. We look forward to hosting additional webinars. We have one you'll see marketed here shortly with a legal firm talking on Thursday about the legal aspects, and we can talk even more depth about potential risks for forgiveness and you know, is this a necessary loan sort of qualification that companies have to make. So with that, thank you everybody. Enjoy the day.
Thanks Randy.
Thanks Lori.
Thank you.
So much.